Okay, let's unpack this. Welcome to the deep dive. Today, we're going to take a closer look at Metallicus. And specifically, their really ambitious vision for what they're calling a digital banking network. Our main source here is their own blockchain solutions, our products overview. It's got this pretty compelling diagram, too, showing how everything connects.
Yeah, that visual really helps.
So our mission really is to explore how Metallicus is trying to deliver these blockchain solutions for, well, they say everyone, from individual users looking for financial tools right up to corporations and banks.
And what's fascinating here, I think, is exactly that scope you mentioned. I mean, in the blockchain space, which moves so fast, trying to build a truly comprehensive ecosystem like this, one that addresses so many different kinds of users, that's a huge undertaking. So understanding all the different parts and how they fit together, it's really crucial for you, the listener, to quickly get a handle on not just what they're doing, but why it might actually matter in the bigger picture of digital finance.
Okay, so let's dive right into that central idea then. Metallicus, the digital banking network, TDBN. When a company calls itself a digital banking network in this space, what does that actually imply, about their goals? And how do their products, like in that image with Metallicus in the middle and everything circling it, how do they actually support that vision? It looks like they want to be a central hub.
They absolutely do. Yeah, it means they're not just offering one or two separate things. That image, like you said, it perfectly shows they're building this deeply integrated suite of products. The goal isn't just, buy some crypto here. It's about creating a whole financial ecosystem, something seamless that bridges traditional finance in this new decentralized world.
Bridging the gap.
Exactly. Making digital assets accessible, yes, but also really functional. For individuals, sure, but also for companies. And even established banks. They're kind of aiming to be the underlying infrastructure, the rails, that let digital assets work with the sort of reliability and, importantly, compliance you'd expect from a traditional bank.
That interconnected idea sounds incredibly ambitious. So what's the tech underneath it all? What makes it possible? Let's look at the foundation, the core blockchain stuff.
Right, the bedrock. So at the base, you've basically got two foundational blockchain solutions. First up, there's the XPR Network.
Okay.
This is described as their fast, scalable Layer 1 blockchain. It can run dApps, decentralized applications, and it enables free and instantaneous payments, which is a big claim.
Pretty instant, yeah.
And a really key design feature they highlight is how it communicates with traditional finance players, banks, payment processors. It does this through something called an XPR signing request, or XSR.
XSR.
Yeah. You can think of XSR as sort of a secure digital handshake. It lets blockchain transactions talk smoothly with, say, a bank's existing systems. That's crucial if you want to actually integrate digital assets into the financial world we already have.
Makes sense.
Then number two, you have Metal blockchain. Now, this one's pretty unique because it's a Layer 0 blockchain.
Layer 0. Okay, explain that a bit.
Right. So what Layer 0 means is it allows other chains, potentially any chain, to deploy on top of it and find consensus. It uses efficient methods like the SMOL protocols, you might know those from Avalanche, known for being fast and resilient.
Ah, okay. So it's like a foundation for other blockchains.
Exactly. And this architecture lets it run on a highly efficient proof-of-stake model, POS, which crucially completely gets rid of the need for proof of work, or POW.
Right. So having that Layer 0, the Metal blockchain, as the foundation, it sounds like they're really emphasizing interoperability, getting different chains to work together, and scalability. For this whole digital banking network idea, why is Layer 0 so important compared to just building on, say, an existing Layer 1?
Good question.
And also, that shift to POS, it definitely tackles the energy concerns of POW, right? But does a POS model bring its own challenges? Maybe unique security things or risks of centralization that Metal blockchain has to specifically manage for this banking vision?
Excellent points. Yeah. Layer 0, like Metal blockchain, it provides that really deep underlying infrastructure. It enables other blockchains, Layer 1s, or specific applications to be built on top of it,
right?
Instead of just being one standalone chain. And for a digital banking network, that's vital because it allows for this diverse ecosystem of specialized chains or apps to all run together and ideally interoperate smoothly. It's about providing the foundational rails for a whole network of chains, not just one single track.
Okay, that makes sense. The network idea again.
Exactly. And regarding POS, yes, it's super efficient. But the key for Metal blockchain is how they implement it. They emphasize having a highly decentralized set of validators and robust protocol design. The goal is to build in the security and integrity you absolutely need for financial transactions. It's about tackling those common worries about centralization you sometimes see with POS systems, engineering trust right into the protocol itself.
That definitely clarifies the architecture.
Yeah.
Okay, so we have these foundational layers, XPR Network and Metal Blockchain. How does this powerful tech actually turn into things that, you as a user or maybe the business could actually use day to day? What's the practical side?
Right. This is where the rubber meets the road. This is where their digital asset platforms, wallets, and the B2B solutions come into play. So for individuals, you've got MetalPay.
MetalPay, okay.
This is positioned as a compliant, user-friendly platform, buying and selling crypto, basically. But they highlight features like automated recurring trades and peer-to-peer transactions.
So automating strategies.
Yeah, exactly. It feels like they're trying to empower even people new to crypto to systematically build up their portfolio, maybe make it less intimidating than just jumping into active trading, kind of democratizing it a bit.
Got it.
And there's Metalix. That's their decentralized exchange, a DX.
Okay, a DX.
It emphasizes speed, security, multiple coin pairs, the usual DX stuff. But here's where it gets really interesting, I think. Metalix supports various DeFi features like lending and borrowing.
Right, standard DeFi.
But, and this is key, they stress it does this while maintaining compliance with the U.S. regulatory framework.
Compliance in DeFi. That is interesting.
It really is. It's not just a side note. It seems like a core strategic choice. In a DeFi space, often called the Wild West, adding this layer of compliance could potentially open doors for, say, institutional money or just more cautious retail investors to get involved in lending and borrowing with more confidence, maybe more legal security. It could change who feels comfortable participating in DeFi.
Yeah, that compliance piece feels like a major differentiator. Okay, what about other tools?
Well, looking beyond just trading, there's WebAuth. This is built on the XPR network.
WebOff, okay.
They're positioning it as potentially a new industry standard for things like device authentication, managing your identity online, processing payments and crypto transactions, all for Web 3.0.
So what does that mean for me, the user?
For you, it means your smartphone becomes this kind of central command center for your digital life. You can use it to securely approve transactions, make crypto payments, link your decentralized identity across different services, manage access for your logins like verifying or removing access, and even reject attempts by others to impersonate you online. It's about securing and simplifying your whole digital footprint using one tool.
That sounds pretty powerful.
Yeah.
And useful. What about businesses?
Right, they haven't forgotten businesses. There's the MetalPay API.
API, so for developers, integration.
Exactly. It's a B2B business-to-business API. It lets other companies offer a white-label crypto solution directly to their customers.
So a bank or another app could use this to offer crypto services under their own brand.
Precisely. With what they describe as simple integration, businesses can start offering digital asset trading, investing services, and so on. The benefit for them is potentially increasing customer engagement, finding new growth areas, maybe new revenue streams, all without having to build their own complex blockchain infrastructure from the ground up. It's like a plug-and-play crypto module for businesses.
Okay, that's a very comprehensive suite then, covering users and businesses.
Right.
Now, any robust digital ecosystem needs its own internal economy, right? The fuel. What about the tokens and coins? What powers this digital banking network? What makes it tick economically?
You're absolutely right. Understanding the native tokens is really key to grasping how the whole ecosystem works internally. They state that within each ecosystem or product, there's usually a token or coin that powers it. And these have real utility things like on-chain governance, voting, paying for network resources, stating for security, and more. They're designed to be functional assets, not just for speculation.
Okay, so let's break them down.
Sure. First, you have the Metal DAO, which uses the XMT coin.
Metal DAO. Decentralized Autonomous Organization.
Correct. It's a community-driven platform. Holding XMT tokens lets users actually participate in making decisions about the Metal L2 blockchain and the Metal Dollar protocols. You get a direct vote on proposals that shape where those products go. It's supposed to be decentralized governance in practice.
Giving the community a say.
Yeah.
Okay.
And for the XPR network, its native coin is XPR.
Right. We mentioned the network earlier.
Yeah. And the XPR coin isn't just something to trade, it's the operational fuel for that network. You use it to pay for resources. They mentioned CPU, net RAM, typical blockchain resources.
Like gas fees?
Kind of, yeah. But it also lets you participate in network security through staking, and you can vote for the block producers who validate transactions and participate in on-chain governance, too. So multiple functions.
Utility token. Got it.
Next, the Metal blockchain, the layer 0, it also has its own native coin, just called Metal coin.
Metal coin for Metal blockchain. Simple enough.
This one governs things like staking fees on that chain, transaction costs, and emission rates, how new coins are created. Its main job is powering the security and operations of the Metal blockchain itself. And if you want to be a validator on this layer 0, you need to stake a minimum of 2,000 Metal. So it directly ties into network security.
Okay, 2,000 Metal to be a validator.
Then there's the loan protocol, loan token. This is native to the loan ecosystem running on Metallicus, their DX.
For the lending borrowing part.
Exactly. Its main purpose seems to be rewarding both the borrowers and the lenders for actually using the platform. It creates an incentive to participate, and it also has a governance role for that specific protocol.
Rewarding participation. Makes sense.
And finally, one that sounds particularly interesting, the Metal Dollar XMD coin.
Metal Dollar XMD. A stablecoin.
Yes, but they describe it as the world's first non-algorithmic stablecoin basket.
Non-algorithmic. What's the significance of that?
Well, it means it's not relying on complex code or algorithms, which can sometimes fail spectacularly to keep its value stable, pegged usually to $1.
Right, we've seen issues with those.
Exactly. Instead, XMD is backed by a diversified basket of other stablecoins. Specifically, established, regulated stablecoins that are themselves supposedly backed by real bank reserves.
So it's like a stablecoin backed by other stablecoins.
Pretty much. A basket of them for diversification. This multi-layered backing, which is managed by a smart contract on the XPR network and governed by the Metal DAO using XMT, is designed to offer, hopefully, superior stability and transparency, avoiding the risks seen with purely algorithmic designs.
That non-algorithmic reserve-backed basket approach sounds much more conservative, maybe more trustworthy for a banking network.
That seems to be the intention, yeah. Stability and trust.
Okay, so, wow, to bring this all back together then, we've really dug into Metallicus' whole setup here. It's quite comprehensive. From those foundational blockchains at layer 0 and layer 1 through all the user platforms like MetalPay and MetalX, the B2B tools like the API, and right down to the specific tokens like XPR, Metal, XMT, and that XMD stablecoin, it really does look like they're building a genuinely interconnected digital banking network. Our goal was to give you that shortcut, to get you well informed about what can be a pretty complex ecosystem, understanding not just the individual pieces, but how they're meant to fit together.
And looking at all this, it really raises, I think, an important question for you, the listener, to maybe ponder. As we see more of these deeply integrated and notably compliant blockchain ecosystems emerge, systems designed deliberately to work across individuals, businesses, and maybe even traditional banks. How might this fundamentally reshape financial services as we know them? What new possibilities does something like this unlock for digital assets becoming, well, just a normal part of banking? And could it, down the line, make some of our current traditional financial systems start to feel, well, maybe surprisingly outdated? Something to think about.